Welcome to India Market Open. It's Tuesday morning. Asian markets are in a bit of a sulk, but it seems like back home, the rally may continue. It's a flat start on D-Street, but I think it could be probably a gap up and a little bit of consolidation after record highs back to back.
Yeah, and post Jerome Powell's statements, I mean, I think the Fed is, over the last two times, has sounded increasingly dovish. Dovish? Yeah, I think it's that term.
I'm remembering you saying the last time we talked about Jerome Powell softening, where you made the point that can you really trust what he says because he keeps changing his mind.
Yeah, but the last 2 or 3 times now, it's starting to become a bit of a trend. Hopefully, good for risk assets.
I would say global markets, American markets, and in that sense, by extension, everyone's watching two men right now. Jerome Powell is one of them.
Donald Trump is the other one.
Donald Trump is the other. So it's all about Trump and it's all about Powell. That's essentially, if I were to tell you in one line what's happening in the US markets, that's what's happening.
But Tamanna, with his comments yesterday of, I guess, indicating...
Which one, Powell or Trump?
We're sticking with Jerome right now. So
okay.
He did say that waiting for it to come down to 2% would be too late in that sense.
That's what I'm
But Asian markets have reacted negatively to that this morning. So it almost seems like we're buying into the rumor and probably selling this morning because barring one market, I think, across Asia, everything is a sea of red.
So we'll come to Asian markets. Let's start with what happened with US markets overnight as well. And like I said, it's all about Trump and it's all about Powell. So the Dow definitely celebrating Trump's survival of his assassination bid, closing at all-time highs. Dow futures also up in the positive right now, as we can see in NASDAQ, S&P 500. So that theme completely continuing across US markets. Just a sense of why I'm saying it's all about Trump. Essentially, the sense is that what has happened with Donald Trump and his survival of the assassination bid has completely put a tailwind into his campaign. His likelihood of becoming the next president is high. Markets, at least US markets, like Trump because he does not want to tax the rich. His policies are seen as pro-investor. And just a sense of what happened in, to the Trump stock in markets. On Monday, trade was up about 30%. That's Trump media. Of course, in futures, trade again knocked off about 11%, but in regular trade, was up about 30%. To the point about Jerome Powell, that's the other side of the story and a big side of the story. So Jerome Powell started that conversation, and maybe, Samina, that's why you have Asian markets a little, not too ready to break out the party hats yet. He started that conversation from where we are quoting him in Washington, saying that I am not making a statement indicating what's going to happen with rate cuts. So that was his first disclaimer. But then he did go on to say that the action that central banks take and the Federal Reserve takes shows impact with a lag, which is why they won't wait till 2% to start cutting rates because then you've gone too far. So that was the context in which he's spoken. We're, of course, picking up that one sentence and the street is looking at that one sentence. Not just Asian markets, even bond yields, if you look at it, after the first celebratory move, bond yields didn't really react too positively. So your 10-year treasury, for example, is back at 4.2 levels, 4.23 to be precise, post Powell's comments and post the entire Trump story.
In fact, isn't actually that the reason why the street should ideally be positive? Because here's the Fed chairman saying that because it works with a lag, and if the street earlier thought that if the number hits 2%, that's when the rate action will happen.
Correct.
Now that is not going to be the case because they are saying that since it works with a lag, we will not wait till 2%. So therefore, the cuts may be a bit earlier than what the street may work with if indeed the street was working with a presumption that it needs to hit the 2% mark.
It's Powell who's been saying that we're waiting for 2% now.
But now he's saying that
he's qualifying.
You would
he's
imagine the
cushioning
markets
himself.
to get excited. But I think what could be impacting sentiment in Asia is the Chinese GDP data.
Yeah.
Now that was very disappointing yesterday. Most of your brokerages, JP Morgan, Goldman Sachs, have actually gone back and reviewed the full year GDP growth in China much lower. Now, if that is what's happening, then this industrial recovery, this metals moving up, the world growing together may be delayed. So while you get a rate cut from the US, China still is not in the best of health. And like you can tell, you've got Shanghai that's down, you've got Hong Kong that's trading lower, South Korea isn't doing too much, barring Japan, which just like India is in a little world of its own, is doing its thing.
Japan's also come back after a market holiday, so maybe, I mean, you're seeing some kind of an up move. But, you know, since we've been speaking so much about Mr. Powell, let's listen in to exactly what that comment was.
When we change interest rates, that tightens financial conditions, and that in turn affects economic outcomes, you know, growth, labor markets, and ultimately inflation, but with lags that can be long and variable, as Milton Friedman famously said. And the implication of that is that if you wait until inflation gets all the way down to 2%, you've probably waited too long, because the tightening that you're doing, or the level of tightness that you have, is still having effects which will probably drive inflation below 2%. So we've been very clear that you wouldn't wait for inflation to get all the way down to 2%. Our test has been for the past quite some time that we wanted to have greater confidence that inflation was moving sustainably down toward our 2% target. And what increases that confidence in that is more good inflation data. And lately here, we have been getting some of that.
Okay. Lately, we have been seeing some of that. I mean, that's the key point. Powell perhaps referring to the CPI data that came in last, which was good. All right, so that's the story about Powell. What has it done to crude? Crude, in that sense, reacting more perhaps to Trump, because the whole Trump piece has seen the dollar strengthen. That's weakened crude prices. And you've seen Brent at about 84 odd, the NYMEX also down in the red. So that's the story with crude. Asia, as Samina said, has opened mixed, and Japan's the only outlier. Could be China weighing on sentiments. But as far as India is concerned, I mean, we march to our own beat. And we're looking at a positive start, not a massively positive start, but yes, definitely flat to positive, I would say, as far as the Nifty implied open is concerned. Now, what are the other factors coming in for India? And just two very important points that I want to quickly talk about before we get to the trade setup for the day domestically. One is the fund flows. Let's look at that. Second consecutive day that FIIs have been buyers, 2,685 crores in buys. DIIs have sold about 331 crores. And the other is a statement from Temasek. In fact, my colleague Sajid spoke to their India head, and we'll play that bite out for you later, but talking about how Temasek is looking at investing $10 billion in India. And it needs to be seen in the context of a pivot away from China, focus on India. So those kind of factors will definitely be broadly positive from an Indian
perspective. You're right. In fact, Temasek owns 19% of its investments coming from China. And they very strategically indicated that because of trade tension in China, they would be looking to diversify. So in their book, I think 7% of their book is South Asia, and of that 19% is with China. We don't know how much percentage that is for India, but nevertheless, I think that's great news coming in for us.
Yeah,
just one more person betting on the India story.
And a large one at that, so no complaints whatsoever. Anyway, so yeah, and we'll of course play that out a bit later on in the day. Just a quick set of what the trade setup could look like today. So the market's hitting new highs. Yesterday too was a bit of a trending day, and no immediate signs of reversal being seen as yet. So that is one positive sign in the session. But increasingly, as the budget day comes by, the next few days, maybe the budget-oriented sectors and spaces where earnings have a near-term support might well be the pockets which might actually do well. And therefore, I think increasingly, if you are a short-term trader, then maybe you want to look at pockets which have either a budget benefit thing attached to them, and somewhere there is near certainty, because a lot of stories will fly around, but also where earnings reportage is looking a lot more steady in the last few days. The last point is IT, and has had a bit of a run-up since June 20th, as we've been saying. Now, if you just look at trade yesterday, post the TCS fanfare and HCL Tech numbers, the initial uptick notwithstanding, a lot of these stocks came off in the session yesterday. HCL Tech was down about 3.5% from its day's highs. Similarly, For a LTI Mindtree, 2.3% off from the day's highs. TCS, Tech Mahindra, Nifty IT itself. So have we seen a near-term peak because the good news has been digested? Or can comments from Infosys change that? That remains to be seen, because the commentary from HCL Tech versus TCS was quite chalk and cheese, so to say. So it'll be imperative upon the others to come out and give that commentary for IT to perform well, because IT needs to do well to mask the disappointment that banking largely has been giving on its quarterly numbers. So let's wait and watch if that were to happen.
Niraj, while you talked about banking, what was interesting, and I know you were not in, but the last hour of trade saw a whole bunch of these banks start participating again. So while Bank Nifty was on the back burner for the last few days, we saw earnings from Bank of Maharashtra, and I think that impressed the street quite significantly. So there you can see Bank Nifty was midday weak. You had stocks like Bank of Maharashtra up significantly, the likes of SBI, a whole bunch of the broader market banks actually pulled their weight in trade. So SBI went home with gains of 3% yesterday, and most of that gains came in the last hour of trade. So while IT's got to do its bit, it seems like banks could be back on the foray. What also stood out yesterday was that the rally was broad-based. So unlike what we've seen on Thursday and Friday, where the markets have gone up on back of Friday, it was all about one sector, which was IT. Yesterday, you saw gains across the board. Smaller sectors participated, and none of them were budget stocks. So you had tire companies doing well, you had auto companies doing really well, banks reacting to some of those earnings, counters like HDFC Life reacting to their earnings. In fact, railways, fertilizer, and defense, which was the big theme for budget, actually underperformed and saw profit taking in trade yesterday. Today morning, of course, there'll be important levels, but if 24,600 is held, we could be making an attempt all the way up to 24,900. On the downside, support has also moved from 24,000 to 24,400. So lots of things that may be working for us, but who's to tell? Today could be a day when the markets may take a break, a little bit of a breather. Tomorrow is also a holiday, so you may see some consolidation and a flat sort of trading day in terms of the session that we're lining up for ourselves. In terms of stocks, like I said, 36% of the Nifty 50 is going to be reporting earnings this week. So it's a very, very earnings-heavy week from the likes of Infi, Asian Paints, Bajaj Auto, to name a few, have reportings lined up. In terms of counters to watch in the broader markets, we had three earnings that came out post-markets close. Hudson Agro is the first one on my list. Pretty solid set of numbers here. You had their revenues up 10% to come in at 2375 crores versus 2151. EBITDA was up massively by 39% at 330 crores versus 238 crores. Margins have also improved nearly 200 bips, so coming in at 13.9 versus 11.1. And net profit was up 63% at 131 crores, even beating Bloomberg estimates. A quick one on Angel One. Again, this sector, this vertical for the non-banking space has been phenomenal. It's a huge part of their business, member is trail income. So what you see is companies like Anand Rathi, Angel One keep performing and building on to the base that they have as their private banking vertical keeps growing, and so does the equity markets returns. With Angel One, numbers, like I said, were really good. Their total income was up 74% at 1,410 crores versus 81 crores. Net profit, in line with industry average, was up 33% to come in at 293 crores versus 221. The other one that we want to talk about is SpiceJet, actually. They posted two-quarter earnings together. Just to take you through those numbers, their net profit revenue was down 30% at 1571 versus 2043. Profit was up 7 times at 119 crores versus 17 crores. Revenue for FY24 was also down 24%, and their loss was also down. But what stood out, the reason profitability has gone up, because ETF prices have come off quite significantly. In fact, that's down 37%, and that's a core sort of ingredient that goes into their margin picture. So on back of a reduction in ETF prices, you've seen an improvement in profitability. Airport charges have also reduced in FY24 by 13%, and aircraft maintenance costs are down by 25%. So operationally, better performance from SpiceJet, but top line still is a bit of a sour for SpiceJet. I don't know how the street would look at this because everything that has led
8% up yesterday before the
earnings, right? But the earnings have gotten better as a function of what's happening outside of SpiceJet. So a reduction in ATF, a reduction in airport maintenance, a reduction in airport charges. All of this would also help Indigo, I'd imagine.
But YOY, EBITDA are down 83%.
Yeah,
it's
so
the shocker. So I would reckon that all the uptick that happened yesterday, and
could
presumably on a post of a social media influencer, could all well come down.
No,
I mean, this was doing the rounds yesterday.
Was that the origin?
Maybe, but one of the reasons doing the rounds, and somebody sent it to me that somebody put out this post about this day before yesterday, and the stock was up. So what will happen to poor retailers who bought into it if SpiceJet were to deliver poor numbers? And
no, and because they've also posted 2 quarters together, it's a little confusing. So if you look at if you do this on the internet, there are very many ways of looking at these earnings, and it's tough to understand what these numbers really are. But from what we understand, the reason the number looks okay on profitability is because of a drop in ETF. So you want to keep that in mind. It's got nothing to do with SpiceJet running its business better today than it did last quarter.
This is a company which keeps getting dragged to court by people who they owe money to. And they have to keep settling out of court. So that can't be good for business in any case. So fundamentally, nothing very positive about SpiceJet as of now.
I think so. But you never know. If the markets are in a mood to reward, you may see that 7% rally continuing today.
Yeah. All right. So a few more stocks that we'll talk about. But before that, just one piece, because everyone is so obsessed with Trump right now, and I think we did not mention this. I think we should just quickly mention this, that he has chosen his running mate, J.D. Vance. So we know who the vice presidential candidate will be for Trump. Now, why is this important and why are we talking about it? Because remember, Trump is also no spring chicken. Everyone keeps talking about Biden's age, but it's not like Trump is very young either. He's 78. J.D. Vance, his running mate, is about 40 years younger. He's a senator from Ohio. And he has, in the past, completely flayed Trump. There's an Indian connection as well. J.D. Vance's better half is an Indian origin woman. So that's one interesting nugget I thought I'd throw in. But coming back to what is exciting today in the markets and what you need to look at, few stocks Samina spoke about, few that I will put on my radar. One of them is definitely Vedanta. Now, Vedanta has been, I would say, getting a second lease of life as far as investors are concerned. They've been kinder to Vedanta over the last few sessions. And remember, the company's QIP has open floor price set at 461.26. So remember, on June 21st, they approved this QIP to raise 8,500 crores. It's part of the company's ongoing efforts to optimize its capital structure, enhance shareholder value, and aims to reduce its standalone debt. That is key. They want to reduce their standalone debt by $3 billion over the next 3 years. So Vedanta's one to watch.
I was amazed that here's a company that is coming out with a QIP floor price which is just around the current market price.
Correct.
Just speaks about the demand that they must be sensing.
Complete confidence. It speaks to the confidence. I agree completely, Niraj. It speaks to the confidence that Vedanta is feeling in its offer right now, and how shareholders are going to view it. Is that confidence warranted or not? Will the street reward Vedanta? That we'll have to see, because that's a different story. Jio Financial Services is the other one. Their numbers were out yesterday for Q1. Revenues down 0.1%, so pretty much flat. Net profits also flat, 0.6%. Remember, the whole story with Jio Financial right now is a company in waiting. In terms of investors, customers, everyone's still waiting to see what Jio Financial will do, and a lot of that is priced in to some extent. So they've had the beta launch of the Jio Finance app. They've received RBI approval to operate as a core investment company and will be launching loans against property and securities. We'll be focusing on channel expansion. So JFS is one to watch out for. Lots of stocks today, honestly. So we're going to come to as many of them as we can, but I must talk a bit about Z. Again, for the simple reason of a company that has been running up consistently. And Z has seen quite a run-up, say about 6.5% in the last 1 week for a company which has been taken to the cleaners by investors. A lot of issues in this company. What has changed for it is maybe investors seeing an attempt to improve things. So the shareholder nod has come. They were going to raise funds. So 2,000 crores is what they're going to raise. But what are they going to do with those funds? That clarity is awaited. What is the route they're going to use to raise these funds? That needs to be seen. And that nod may be seen as another sentimental positive for Z, which is why I've put it on my radar and my stock list. I think what's also going to be interesting, and I don't know if you want to come in on this, Niraj, is who exactly comes in and invests in Z. Now, what we're hearing from the company is that after the whole Sony misadventure, they're going to look not for strategic investors, but just pure play financial investors. They don't want to go down that route again. To look at someone who wants to help them or run the business for them. They just want someone who puts in the money. We'll have to see if those suitors come in.
Yeah, could be very interesting, the nature of the money raise and the pricing at which it is done, Tamanna, right? So watch out for Z in the session today. And remember, it's had a bit of a run-up too, by the way. Just a couple of others and then some brokerage notes. And I know Harsh is waiting for some brokerage notes as well. But yesterday, the MF purchases were interesting, guys, because Eris Life, Franklin Templeton purchased about 10.94 lakh shares at 1,000 rupees per share. A stock slightly higher than that, but could be interesting. But the other one, which is more interesting on the MF purchase list, is Pearl Global. Now, Pearl Global, HDFC Mutual Fund bought nearly 7 lakh shares at about 731. I think we have the graphics for the same, but be that as it may, HDFC Mutual Fund bought nearly 7 lakh shares at a price of 731 rupees per share. Now, the reason why it's interesting is because one HDFC Mutual Fund has bought into it. It's a large purchase, and they've launched their QIP as well. So Pearl Global remains a stock in focus that you want to watch very, very carefully today. Watch out if there is some uptick there. Yesterday,
go on. No, please.
Yesterday, the tire stocks were active, so that's the second set of stocks on my radar. Morgan Stanley's come out with a note on tire stocks saying that the price hikes show a focus on margins, but they see limited earnings upside in view of the sharp rise in commodity and regulatory costs. They remain equal weight. So watch out. Was a very buzzing day for tire stocks yesterday. Not all brokerage is very kind to them. Let's see what happens there.
Basically, they think the price hike is not enough. 3 to 7 rupees is on
to
MRF
save margins,
is being saying,
but nothing dramatic.
Yeah.
More than that.
On the heels of auto sales declining, the sector
All
looking
that.
weak, and then you have tire companies, which is a key ancillary for auto stocks to go out and raise prices. But on the charts, and Niraj, I think consistently across the board, every analyst that we spoke to yesterday said on the charts, you have JK Tyres that is a very aggressive price target, but even the likes of an Apollo are looking very well placed. So maybe it's a swing trade that's underway and these counters may gain. Fundamentally, JK Tyre could be one that could stand out because they fixed the house. They've undertaken price hikes. I'm not sure the brokerage Puneet mentioned, but one of the big brokerages has a price target of 700 rupees on JK Tyre. So it's a huge runway on the counter. But just two more to add.
Sorry, I just had one more stock, the last one on my list, and that's the City note on Vodafone Idea. And I think this is very important because today could well be a telecom day. There is Vodafone Idea and City's note. Okay, let me just enumerate the Vodafone Idea note first. City has a positive catalyst watch with a buy rating, a target price of 23, initial target price of 23, by the way. They say that the company is apparently approached the Supreme Court for early hearing for correcting the arithmetic errors in the computation of AGR dues. They say the potential for reduction is to the tune of 30 to 35,000 crore rupees as per the management. This is big, and they say that their target price could move to 28 rupees in the event of a favorable outcome, and it could also be a key, quote, indirect positive for Indus Towers, on which they have a target price of 450. So Vodafone in news, Indus in news, there is a JP Morgan report initiating coverage on Bharti Hexacom with a stiff target price. Bharti, City says, could also be an indirect beneficiary, everything but geo benefits, and therefore it could well be a telecom day today.
I agree with you, but just want to
agree with Vodafone. Or agree with City rather.
Add this, not even 2 cents, 1 cent. What Vodafone has gone to court with is called a curative petition. That means the Supreme Court has decided, they've given their judgment, but you've come back and said, please, one more time, will you think about it? Generally, courts don't take too kindly to it. They are not in a mood usually to change their mind after they've spent years. And that Vodafone AGR trial, no, it's not just Vodafone, that whole AGR trial went on for years. So courts generally don't take too kindly to the idea that, no, now, after all of that, we'll think about it again. So just that one caveat there.
And even telecom stocks, they've been languishing after the tariff hike, right? We've not seen, there were days when Vodafone would go up 3-4% on any given day. And of course, since the tariff hike, these stocks have just stayed where they are. They've in fact declined, to say the least. But this morning, of course, the last price target on Vodafone used to be 17 rupees. Now 23 and 28 is what we're hearing. So anyone who's lapped up on this may be appreciating it. Just two quick stocks. Century Textiles, the stock has been a good mover in 6 months, but again, very interesting because they've gone out and bought 5 acres of a land parcel in the north with the potential approximate 10 lakh square feet of development and expected revenue of 1,400 crores. So this could be big for Century. It did close the day at the day's low point yesterday, but maybe this news could cheer the counter up and you may see some buying and an upward move on the stock. Ujas Energy, I don't know whether Niraj or Tamanna talked about it, but the board has approved a bonus issue of 4:1 and the appointment of Anurag Mundra as a whole-time director. So this is another one. The stock was up 5% in trade. Could see another big move in terms of an upper circuit on Ujas Energy in today's trade. But that's, of course, what I have. Anything else that you want to add?
I have a few. I mean, it's been just such a news-heavy sort of evening, interesting Monday evening. Paytm is one. Again, I've talked about stocks which have been big movers with regulatory overhang. So Paytm has received a warning from SEBI. It's an administrative warning for related party transactions. It's a transaction between 197 and Paytm Payments Bank. So this is something which SEBI says that they availed services without approval to the tune of about 324 crores and rendered services of 36 crores. Could be a negative sentimentally for the stock, which has once again been at an extreme end as far as investors are concerned. Sometimes big hopes. 1 month it's gone up about 10.5%. So Paytm, which has been on recovery mode, this might be a hit today. PC Jewelers, very quickly, IndusInd Bank has accepted a one-time settlement proposal from them for unsettled dues. Could be a positive. And just HUL, I wanted to mention, I mean, this is now one of those big boys which moves suddenly sometimes and not too much, but this I found interesting and should mention. They've approved the sale and divestment of their water purification business, Pure It. They'll sell it for about 601 crores. And they're doing this because they want to focus on core strategies, which is something that they have stated. It's a stated intent, but that could be a bit of a positive, or at least a good thing that a large company like this wants to prune, businesses that don't make too much sense.
Lastly, before we get to notes, Jefferies has come with a note on HDFC AMC, a buy rating. The target price is raised to 4,900 from 4650. They are saying it's delivered a strong Q1 earnings. The share of QA AUM has inched up to 64.3, which is 130 basis points QOQ expansion. So watch out for that one. And Global Vectra could be interesting. Vijay Kedia's hiked stake by 1.94%. Typically, Vijay Kedia's name evokes a response, so do watch out for that one. And in MK, which is a listed name, Dolly Khanna's name appears with a 1.63% stake. So that's the other one to keep an eye out for. But very quickly, I'll move on to our colleague Harsh Seta, who's standing by with another earnings candidate. HDFC Life had come out with the results yesterday. A clutch of brokerages come out with their views here. Harsh, what's standing out?
Well, Niraj, it's interesting because the numbers itself, when you look at it on a top-line basis, slightly, or rather pretty much in line. Essentially, it's the margins which have been impacted because of value of new business coming in, stable or as per expectations. So the top line grew a wee bit better. The strong growth was driven by ULIPs. That's what Nuvama seems to be suggesting. They have a target price of 780 on this one, so a 22% upside from here. VNB came in around 0.5% odd below estimates for Nuvama, and therefore margins slightly on the softer side. The shift in production towards linked products is what drove that softness in margins, is what Nuvama suggests. And the company suggests that they're going to continue to focus on growth while they're willing to forego a little bit on margins. The focus is going to be more on growth, essentially. They're not going to completely defocus from margins. Higher surrender value rules, that's one of the key metrics that we were looking out for on with regard to HDFC Life's numbers. And with regard to just what Nuvama is doing, they've inched down the VNB numbers by around 0.5% and 2.5% for FY25 and 26. Valuations currently at 3 times FY25 basis Nuvama. Quickly moving on to Citi. VNB margins around 70 bips lower than Citi's expectations. Again, largely what Nuvama was also suggesting. Top line expansion, VNB largely in line, and therefore you're seeing that reaction. Higher than expected ULIPs contributing to margin pressure continues to remain the same. We can flip it over to the next one. Largely what Citi seems to be suggesting, just in terms of commentary, is that the contribution coming in from expansion, both geographic as well as into tier 2, tier 3 and odd cities, 60 plus branches added by HDFC Life, and therefore that is going to drive the positivity on HDFC Life. APE came in around 4% above estimates, and this is of course MK suggesting this. APE growth was offset by the margin miss, leading to around a 2% beat in VNB. VNB came in at 718 crore, 18% growth year on year. Management is confident of doubling the VNB over the next 4 years. This is going to be critical in terms of what HDFC Life has been guiding for. Continues that guidance. Expect VNB and APE growth through HDFC Bank firing up. That banca channel has moved from now 56% to 65% HDFC Bank related mix, in fact, for HDFC Life, and therefore that increase clearly suggesting positivity. 18% upside is what MK currently attributes in terms of valuations, 2.5 times FY26 expected valuations.
All right. Thank you for that, Harsh. So HDFC Life possibly in focus today as well. Various brokerage views coming in there. We'll take a very quick break, but we're back with FNOQs and more. Stay tuned. You're watching India Market Open.
Welcome back. You're watching India Market Open. The cues from Asia are fairly muted, but let's not forget that we've had a party of our own. And this morning as well, implied Nifty is indicating to a flat to slightly higher start. There's a good chance that the markets will consolidate. Tomorrow is also a holiday locally. You've also got the weekly expiry today. So on back of those two factors, you may see a flat to slightly lower trade close out in the session. Well, that's what the picture looks like. Nifty futures are trading at a premium and there's an increase in open interest, very clearly indicating the trend on the Nifty continues to be upward and bullish. And interestingly, this has changed. So the last few days, what we were noticing is that there was no decisive direction that was emerging for Bank Nifty. This morning, of course, Nifty Bank trades at a massive premium. Open interest is also 4.5%, indicating that long positions are actively being built on the Nifty and in terms of Bank Nifty as well. That's the distribution in terms of OI. 25,000, like you can tell, has the highest highest call OI that was seen in trade yesterday. That was followed by 24,900 and, of course, 24,700 and 24,800 on the upside. On the support side, 24,500 saw a maximum input OI being seen, indicating that is an important level of support for the markets now that the Nifty has taken out levels of 24,600. 24,400 is the other level you want to track. Well, in terms of Bank Nifty, the trading range is fairly large, but 52,000 continues to be an important level of support for the markets. For Bank Nifty, that's where you've seen the maximum put addition in terms of Bank Nifty. On the other side, apart from that, you've also got 52,500 that becomes important in terms of support. On the upside, 53,000. So like I said, it's a 1,000-point trading range on the Bank Nifty. 53,000 is where we saw maximum call OI, which means that is an important resistance that the street will be facing when it comes to Bank Nifty. But the trend, like I said, is looking a little more positive on Bank Nifty after that little recovery that we saw in the second half of trade yesterday on back of a bunch of those PSU banking names gaining in trade. Well, let's take a look at how stocks are turning out to look this morning. Stocks like India Mart and Alchem Labs saw long built up. You had Asian Paints that saw short built up. Remember, Asian Paints goes into earnings today. So very interesting that that's how the markets are looking at it. ONGC, which is one of your top gainers, and Maruti as well, saw long built up. Both those counters were your top gainers in the Nifty 50 yesterday. Well, TCS, remember that was the big performer last week on back of strong earnings, but the counter has witnessed long unwinding. Emphasis, Apollo Tyres. Apollo Tyres, member, has seen short covering, and this one becomes important because, like we said, it spent so many days consolidating that post-short covering, what you may now see again on the stock is a long built-up taking place. Along with that, L&T Tech looked weak. India Cement, which is in an F&O ban, continued to see some short covering. So that's largely what stocks look like, but we have Amit Goel now joining us with his F&O strategies. Amit, hi, thanks for joining in. Amit, yesterday's rally was rather unexpected, but we still managed to do well. We closed at a record high. We're going into trade this morning fairly flat. Tomorrow is a holiday. Today is the weekly expiry. Do you feel today could be a day that the markets may potentially consolidate and may even close lower on back of the recent euphoria that we've seen?
Hi, good morning, Samina, and good morning to all your viewers. Thank you for having me again.
Amit,
yes,
I can't hear you.
1 second, let me check.
Every time this.
Hello, am I audible now?
Yes.
All right, so let me begin again. Good morning, Samina, and good morning to all your viewers. And thank you for having me again. Yes, Nifty has been, in fact, both the indices have been on a tearaway run. We've been, inching up every day, punching new highs. And I would tend to agree with you that we might be in for a breather. I don't see a major price correction in the markets, but I do see some bit of wait and watch kind of a trade, which is basically a time correction mode in the indices at least, for want of a major trigger, which is budget in the next week. However, we need to have a bias as a trader to trade these markets, and the bias remains on the upside. So any dip in the major index, which is Nifty, at about 24,500 or dare I say 24,400 levels, I would look to build some longs from there and play on the long side for a new all-time high with about 200-300 points as a reward for this. The reason why I say 22,400 and not 500, we all know 24,500 is a psychological number with a lot of put over, built up over there. But if you also notice the ATR of Nifty, which is about 200 points, so I would say that, there could be a slippage on the downside if the market tends to correct a little, and that could give us a better opportunity in terms of a risk reward. So that's essentially the play on Nifty.
Right, Amit, what about Bank Nifty? We did see a little bit of participation coming in from Bank Nifty yesterday on back of PSU stocks, doing a catch-up rally. How would you trade Bank Nifty? Do you expect it to continue with an upward journey? Do you expect it to be range-bound? What is the trading strategy in Bank Nifty?
SBI has been one of the strongest performers in the banking space, especially the PSU banks in this year of 2024. In fact, that happens to be one of my picks also. The day I met on the 1st of January, this was the pick that I had given to Agam. But speaking about Bank Nifty in the shorter term, this has been a little weaker on account of primarily HDFC Bank's underperformance in the last few days after the business update. So while Bank Nifty, we had traded Bank Nifty last week with a downward bias, but we felt that there won't be a major price correction, and hence we had played a bearish to sideways sort of short strangle. We are currently looking at collecting all the premiums in that trade. However, right now Bank Nifty has taken support at the lower levels of 52,000 and is showing some bit of positive traction, closing above the 20 DMA also. The bias again in Bank Nifty remains on the upside. However, I feel given the chart and the price action formation, Bank Nifty is likely to be likely to trade in a broader range. Again, the trigger happens to be budget, which is of course well known. So I don't see a major price movement in either of the indices. So the way I would like to play Bank Nifty is I would set up a short strangle for the next week, which is the 24th of July, wherein we sell the 51,000 PE one lot and the 53,500, which is the recent top, near the recent top. So I'm looking to build a fairly large range of 2,500 points, and Bank Nifty currently is hovering around the midpoint of this range. So I'm not building a bias on the either side, but I'm looking at a sideways correction, and the maximum profit on this trade is about 4,500, whereas we will keep a rupee stop loss of about 2,250 or 2,500. Given a margin of 93,000, this gives us a cool yield of about 4.5% to 5%. However, since we have the budget on the 23rd of July, I will advise all the short-term traders who are likely to enter into this trade to exit this trade on the close of business on the 22nd, which is Monday, whether we are in profits or loss. I don't want to enter into a budget session with an unhedged position like a short strangle.
Amit, we go into it. Today would be the last trading day before Infosys reports on the 18th, which is Thursday. How would you position yourself on Infi today?
Yeah, all the IT stocks have given a breakout after the consolidation and the downward movement in the last quarter earnings, which surprised or which were underwhelming. Now with TCS giving good guidance, fairly good guidance, and the kind of run-up we have had in anticipation of this, I believe currently I do not see a major move further in Infosys. In fact, if you look at the option chain, the 1700 call stands at the tallest in the sense that is the near-term resistance, and the way I would like to play Infosys is slightly different, slightly interesting. The way I want to play this is through a volatility arbitrage trade. See, the July implied volatility for Infosys is running at 38%, whereas the August it is running at 26%. So there is a good 12% differential that we can capture here. How I would play this is, I would buy the 1700 put for July and sell the 1700 put of July, one lot, and buy the August 1700 put, one lot again. What this would do is, this would give us a structure known as a long calendar spread, wherein the essence of this trade is that post the earnings on the 18th, by 19th and 20th, we would see a lot of volatility cool off in the near-term expiry, which is July, and which we have sold at about 38%. So the overall reduction in the volatility will give us the returns, and any sharp movement in the underlying should also be protected. So the range that we are getting is about 100 points. So it's a fairly wide range, and we are able to collect that as well.
Right, I mean, that was an interesting strategy, both coming on Bank Nifty and Infosys. With that, it's thank you for joining us. With that, it's over to you, Tamanna.
All right, the other big story we're tracking this morning, the RBI has released revised guidelines on fraud risk management for lenders. The Master Circular mandates a board-approved policy to lay down roles and responsibilities of the board and top management when it comes to fraud risk management. While the previous guidelines were more inward-looking, the new norms have room for the other side of equation, which is the borrowers. Now, what does that exactly mean? Vishwanath Nair is joining us for more on the circular. So this is a big relief for borrowers. Vishy, is that a simple way to put it?
Right. Good morning, Tamanna. So there was a Supreme Court order that came last year, which specified that when you're classifying someone as fraud, you need to definitely give that person a chance to present their case. And only after that can a bank go ahead and classify the account as fraud after considering all the possible explanations that the borrower might have. Now, this was a bit of a topic of discussion till last year, and the RBI has taken its time. It's taken nearly about a year or so before coming out with the new Master Circular. What the RBI is saying is that banks must give borrowers 21 days to respond to a notice once the bank finds enough proof of fraudulent activity, and depending on the responses that the borrower provides, the bank will then have to pass a reasoned order which will classify the account as a fraud or not, depending on the circumstances of the situation. I want to discuss this a little bit more in detail, and for that I have with me the former Deputy Governor of the Reserve Bank of India, Mr. N.S. Vishwanathan. Mr. Vishwanathan, welcome, sir, to this conversation. I just wanted to understand your viewpoint on the new Master Circular that has come out. RBI saying give these borrowers time, consider the responses, and then take a call on whether the account is a fraud or not. Was there a reason why this part of it was not there in the previous circular, or was it always happening unofficially, maybe not written down in the circular?
For all I know, good morning and thank you for having me. For all I know, post the Supreme Court judgment, a separate circular was issued by RBI saying that this process has to be followed. Okay, so what I want to do is to look at the master direction that's been issued yesterday under three strands. One is that it's a consolidation of existing instructions. For example, on matters related to frauds were scattered across different instructions. For example, they were there in regard to, say, when you're selling a loan to another bank, when you're selling a fraud case to an ARC. They were all in those different circulars. So what's been done in the first place is to kind of consolidate all of them into a single place so that there's clarity. And the banks do not have to look at multiple circulars, which is what the RBI said, simplification in that one sense, number one. The second part, what I see in the circular is clarity. So clarity in terms of timeline, as you said, 21 days, timeline in terms of when do you red flag, all those things have been put in place, and also the entire process that has to be followed to go through to ensure that the principles of natural justice have been actually applied before declaring an account as a fraud or fraudulent account. So that's the second set. Third is also the sort of clarity in terms of reporting as to what is the date of occurrence of a fraud, what is the date of detection of a fraud. All those things have been clarified. Similarly, there's clarification with regard to who is responsible for reporting in case of fraudulent instruments, whether it's the payee bank or the paying bank, depending upon the circumstances. So there's clarity. And last, I think, is a fair bit of simplification in terms of the requirement as to when a bank can close a fraud, close reporting of fraud, even in cases where the investigation is going on, but of a given period of 3 years, there's permission to close the fraud. So to that extent, there's clarity there. Last, I think, as mentioned in the press release as well, the RBI has brought in data analytics and market intelligence as an important element of fraud risk management, and it's become part of the whole framework that RBI has put in place. So, to put very clearly, consolidation, clarity, simplification in that sense.
All right, that was the former Deputy Governor of the RBI explaining why this move is so important. Of course, you can watch that entire conversation later on NDTV Profit. You'll also find it on all our social media platforms. Meanwhile, let's turn to the business of the day and what to expect from the markets today. Sunny Agarwal is joining us. He's Fundamental Equity Research Head at SBI Cap Securities. We're also speaking today with Kunal Rambia, Fund Manager at The Streets. Welcome to both of you. Very good morning. Great to have you on NDTV Profit. Kunal, let's start with what we're seeing on the indices. Nifty wavering a little at 22,600 levels. Do you see that fresh impetus coming in on the charts today? Let's get your calls on Nifty and Bank Nifty first.
Very good morning. Thank you so much for having me on the show. If you look at the Nifty performance, it's been quite steady, and yes, the indices are trading near to the all-time high, in fact, but the stock-specific movements are actually more seen. If you look at the Nifty, yes, the target was somewhere around of 24,500 to 24,750, and yesterday we saw the closing near to 24,600. So I think some bit of profit booking or as I say sideways consolidation is certainly likely from this levels, but the trend is certainly intact. So the strategy here would be to buy on dip, and by any chance the Nifty comes down to say 24,300 kind of levels, I think that can be a good opportunity to initiate the buy. If I just look at the Bank Nifty chart, it's been sideways consolidating since quite some time now. And this consolidation was seen from 26th or 25th of June. The support is placed at, I think, around the 52,050 to 52,100, and the resistance is approximately at around 53,100. So in this broader zone of around 2,000 points, Bank Nifty is consolidating. I think this is already on the buy side as of now, near to the support itself. One can think of initiating a buy. Stock-specific movements are definitely likely to continue, but out of two indices, I'll be more focused in on Bank Nifty rather than on Nifty from the risk-reward point of view.
So, interesting day today. You have Fin Nifty and Bank Nifty expiry. You are seeing, you will see a truncated weekend. So markets are shut yesterday. Might be a little more of a cautious trade we could see. Let me just quickly get your picks, Kunal, before we move ahead.
So I'm looking at actually, the PSU banking peg, and the first one which I like the most is Indian Overseas Bank. Now this counter was up by around 7.5%, and it's coming out of a broader consolidation of almost around 6 months. So the trigger point is at around 69. Yesterday's closing was 68.5. So by any chance, if it manages to close above 69, then with the stop loss of 65, one can initiate a buy, and the targets can be as high as 85 to 90, and that's gonna be the 52 weeks high. The second counter which I like the most as of now is IDBI Bank. Now this counter is almost the similar in terms of formation compared to IOB. Counter closed at around 91.5. So the trigger point for this is 92.5. If the counter manages to close about 92.5, I think the targets can then be placed at 105 to 110. These two are actually positional trades, and one can certainly take up, but the levels which we mentioned are very important for initiating the trade.
Sunny as well joins in with the fundamental view on the market. Sunny, how are you feeling about the markets? Comfortable or are you feeling a little nervous at these levels? Because fundamentally now we are borrowing returns from the future. So hence some sort of profit taking, some sort of staying on the sidelines may be a good idea.
Good morning and thanks for having me on the show. Yeah, definitely certain pockets of the market need to have a partial profit booking, especially post-election outcome. We have seen a massive rally across defense and railway stock, and there now the risk in terms of execution lies ahead of us. So in certain pockets, yes, railway, defense, cap goods, where valuations have gone through the roof, their partial profit booking is advised. But at the same time, obviously the opportunity lies in the bottom-up story, the stocks where companies where we are seeing 20-25% kind of earning growth, or sectors which were not favorite, street favorite a few months back. There are a case in point IT, where we have seen a kind of at least a commentary turning positive from negative in terms of demand environment. So yes, stock specific, sector specific opportunity exists, and area where we have seen exorbitant valuation, yes, definitely profit booking is advised in that sector. In terms of ongoing result season, I feel auto and BFSI sector will continue to take the lead in terms of earning growth for Q1 numbers. and hence we find many interesting opportunity to deploy money in auto ancillary, which is again a proxy play on auto OEM. So OEM, BFSI, there are few sectors. These are the few sectors which we like from a short to medium term perspective.
Kunal, let's go into the big movers from yesterday, and I think tires stood out for all of us largely because they made record highs 2 weeks ago, then spent a couple of weeks consolidating, and then ran up quite well yesterday. A couple of them had a short covering led rally. From where we see trade today, do you feel like tire could have an opportunity to go up from these levels, and hence maybe an Apollo or a JK becomes a good buy?
Absolutely. So I'm looking at Apollo Tires now. Again, this counter has not actually made 52x high so far. It's struggling near the highs itself, and the trigger remains at 550. And if you look at the historical data, what we saw on during the Feb actually was the high was made at around 557, 558 levels. In fact, yesterday's attempt was to cross that 550 mark again, but it was a failure. And yeah, so it remains as a perfect buy candidate above 550. If Apollo Tire manages to cross above 550, I think this entire consolidation of last 5 to 6 months will come to an end with the stop loss of around 530. One can initiate a buy on this, and the targets can be 575, 580, and probably at that time we will not even be advising our viewers to book the profits. Keep trailing the stop loss. I think a new trend might just emerge from this levels.
Just emerge. If you get if 550s held out on Apollo Tire, new record highs could be around the corner. For now, it seems like it may spend some more time consolidating. A quick check on implied Nifty before we take a break and can gear you up for an exciting Tuesday trading day. Flat as it gets. So that's the start that we're expecting, a flat opening in terms of trade. There are no specific triggers today in terms of stock-specific action just yet, apart from earnings. We'll take you through all that and more right after this break, so stay tuned.
Back with India Market Open right here on NDTV. Profit a minute away from the market starting off trade. The question only is, what is it that can build on gains today after a bit of a near trending day for the market at large, maybe not for specific pockets. So, the pocket that came off a bit yesterday, I think is an important one to talk about. Kunal, good morning to you. And I wonder if do the charts show that IT has run its course, or was yesterday just a bit of a pause in an up move? What would you do with IT stocks if you didn't have any positions in them?
Very good morning, Niraj Shah. So yes, what you mentioned is correct. Yesterday we saw a bit of pause. But if I look at the overall trend of the IT companies, I think it's very much intact. I mean, let's take an example of Infosys. We saw such kind of corrections somewhere between February to May also, where the counter came down, and yesterday it attempted the high of February itself, and the trend is very much intact. So for short-term traders, it's definitely a time to book the profits and wait for the new trigger to come in. But for someone who is positionally looking at the markets, I think trailing stop loss would be advisable, and I think this rally might just continue, and this time we might see a new high coming on IT counters.
Kunal, you want to quickly come in on Zomato for me? The market is looking subdued, and this is, I think, more like what we should be expecting today after a very solid last 2 days. But Kunal, you want to come in on Zomato? Record highs, back to back. The stock is now trading in uncharted territories. Looks good to buy at these levels.
Absolutely. This market has taught one thing to all of us, that booking profits is crime actually. And this is the classic example of the same. Look at the counter. It's absolutely trending. And at this point in time also, I'm absolutely comfortable initiating a buy. But in the trending counters, we should be waiting for some bit of consolidation or correction to initiate buy so that we can have a favorable risk reward ratio. For now, I'll avoid this counter. If someone is already holding the counter, I think the trailing stop loss at 210 would make sense. For the new entry, I will wait for the counter to cool down a bit, because in the uptrend also we might see a bit of correction coming in. So at that point in time, we shall initiate a buy. As of now, at this elevated level, the new entry is not really favorable from a risk reward point of view. So for now, it's an avoid, but otherwise it's a perfect buy on dip counter as of now.
Well, for now an avoid by the dips, but 230 and the momentum on Zomato because of these platform fees getting hiked just continues. It's quite exceptional as to what they're doing. Okay, there are a lot more earnings as well that should be in focus. Mika Johnson with a list of some of those. Mika, good morning.
Yes, good morning, Niraj. So up first we have Angel One, a good set of numbers. Gross revenues up 74%, EBITDA up 37%. Margins did contract a little, but net profit was up 33% on a year-on-year basis. Now, revenue growth was on higher fees and commission income, which was up 67% on a year-on-year basis. And 65% of revenue booking came from gross booking. Around the 1,123 margin point contraction was on the upfront booking of IPL-related expenses. Then up next, we have Jio Financial Services. Revenues and net profits were fairly flat. Certain key highlights that we should mention is the beta launch of the Jio Finance app. They also received the RBI approval to operate as a core investment company. And when you look at the way forward, they're going to launch loans against property as well as securities, and they're also going to focus on channel expansion. Up next, we have Hudson Agro. The numbers beat estimates on all the fronts. Revenue was up 10% and net profit was up 63% at 131 crores versus the Bloomberg estimate of 91.5. We also have SpiceJet numbers that reported its Q3 as well as Q4 numbers for FY24. Now, according to for the Q4 numbers, revenue was down 30%, but profit was up 7 times. And FY24 as a whole, revenue was down 24%, and the loss, however, narrowed 3.6x at 409 crores. Now, the PAT was up due to the following reasons. First of all, the ATF prices, which is the aviation turbine fuel prices, reduced 37%, as well as the airport charges and the aircraft maintenance costs that saw 13 and 25% reduction in FY24. We also have Vodafone Idea in focus, which has sought an urgent listing of its curative plea against the judgment in the adjusted gross revenue dues case. Now, the CJI said that he'd soon take a call to list the case. We also have a Citi note on Vodafone where they've rated the company as a buy at a target price of 23, which offers a 38% subside on the counter. And they said that senior counsel of the company has once again sought urgent listing, and the target price rise would be from a favorable outcome, and this could also be positive for Indus as well as Bharti. And up last, we have Vedanta, where the company has opened a QIP of 461.26 crores, and this is the set floor price for the QIP. And the QIP was approved on June 21st to raise up to 8,500 crores via the issuance of securities.
Right, thank you for that, Mehika. So some of those stocks on the radar. I want to come actually to Sunny on SpiceJet, and that's a conversation we've been having in the studios as well since the show started. Sunny, I want to get your call weighing in. A profit figure, does that outweigh all the other fundamental issues that SpiceJet has faced? What is your take on the numbers that we've seen in context of the 7% run-up that the stock saw yesterday?
Yeah, Tamanna, actually, to be very honest, I haven't gone through the SpiceJet number, but at a current juncture, my favorite stock would be in this sector in current Indigo. I would like to stay, remain invested in the Indigo, which is a market leader in this space, and obviously the recovery in SpiceJet number gives more confidence that Indigo will also deliver a very robust set of number in this quarter. Sorry for that, I have not seen the SpiceJet number to be honest. Yeah.
No issues. Sunny, just wanted to know if you have a view. Kunal, are you tracking any of those two counters? Sunny spoke about Indigo, but let's talk about SpiceJet as well after its runaway yesterday.
Absolutely. So right from the bottom of May 2023, where the counter was trading at around 25, it went up to almost 75, and that was really a remarkable rally with good volumes also. Since Feb 2024, so far it was sideways negative consolidation, and yesterday was the first attempt to give a breakout. But still the breakout is little away. That's at around 58 to 60 zone. If the counter manages to go above 60, I think the previous rally which we saw the previous year might just continue from here, and the targets can then positional targets can as high as 85 to 90. So I'm very bullish on it. I'm just waiting for a trigger, and that's at around 60, above 60 with the stop loss of 50. One can initiate a buy with the target of 85.
Okay. The stock in focus today could well be Vedanta because of the QIP and the pricing thereof. I mean, it's very, it shows the confidence of the management in the demand that they've priced the QIP slightly higher than the closing price yesterday. Now, Sunny, metals are prone to a lot of risks simply because the China recovery is uneven at best. And this is purely a non-ferrous company, right? But there is a demand for the QIP as is evident from the pricing. What is your fundamental view on Vedanta?
Yeah, Niraj, I think we continue to remain bullish on Vedanta, reason being that it's a proxy play on both copper as well as silver, and at the same time we have seen a massive rally in silver prices during the last 4 to 6 months, and I think the QIP was the overhang in terms of stock price. So once this QIP is through, I'm sure again post deleveraging and growth capital available with the company, and looking at a buoyant commodity prices on non-ferrous side, we continue to remain bullish on Vedanta with a price target of 550-600 and investment horizon of 12 to 18.
Also, Kunal, as we are gearing up for trade, yesterday in the last 1 hour, it was the banks, PSU stocks that, grabbed all our attention. You've obviously commented on SBI, but just going beyond that and staying with the NBFC pack, you also had numbers from an Angel One. Again, very strong numbers from Angel One. As we go on a trade today, if I were to ask you to, trade 2 or 3 stocks amongst the PSU pack and NBFC, what would it be?
So, in the beginning itself, when we discussed, I mentioned IOB, which I'm very comfortable with. The counter is trading at around 68.5. So with this, if the counter manages to cross around 69.5, I think it can be a good trend continuation, and the consolidation of last 4 to 5 months is coming to an end. So I'm very bullish on IOB from the structural point of view. The second is central bank. Again, this counter is just consolidating since Feb. Almost all the PSU counters have the similar formation. So the trigger point on central bank is around 67, above 67, 67.5. With the stop loss of 5%, one can initiate a buy, and the targets can be as high as 20%. And the third counter, which I love the most, is again Bank of Maharashtra. Sideways consolidating counter. Yesterday it was up by around 6%. It's again on the verge of breakout, 70 being the trigger point. One can initiate a buy with the stop loss of 65, and the targets can be 80, 85. Almost all 3 counters, I'm looking at least 20 to 25% rally from the present level, provided it gives a perfect breakout. With the proper stop loss, one can definitely initiate buy on these 3 counters.
Seeing the IUBs in pre-open already up 8%. So you still think it's an opportunity to go in, right?
Absolutely. I'm very bullish on this, and this is a structural trend continuation. So if the counter manages to close about days high, I'll be all in for it.
Let's talk a bit about what's happening with Vodafone pre-market. The news, of course, there that the Supreme Court will hear a curative petition on how that AGR is calculated, could save the company 30 to 35,000 crores if it goes in their favor. That stock up 5%. Indus Tower also following through as a +1 to that story, I suppose. Sunny, any quick views there on Vodafone? Target prices have been set as high as 28 rupees by brokerages today.
Yeah, definitely. I mean, in case the verdict is in favor of Vodafone, that's a big write-off of liability from Vodafone balance sheet. And yes, you rightly pointed out the proxy play is Indus Tower, where the valuations continue to remain very reasonable, trading at 15 times price to earning multiple. And with the Vodafone deleveraging, in case this verdict goes in favor of Vodafone, yes, that augurs well for both Vodafone as well as Indus Tower. So yes, we continue to remain bullish on telecom service as an industry, and this verdict, if it's in favor of Vodafone, we will see a positive reaction in Vodafone as well as Indus Tower.
Well, 1.5% for Indus, 5% for Vodafone. So looks very interesting as to what's happening there. What else has done well? We should pull up Hudson Agro, should pull up J&K India, because that got a very large order from J&K Global. So both of those names will come up on your screen. Hudson Agro is the first one, and J&K India is the second one. 801 for J&K India. Hudson about 11.5%, 1328. Can we pull up the 6-month chart for Hudson Agro if we can before we get to Sunny and Kunal on this one, because clearly this is standing out as the big mid-cap name of the day. Okay, not too much over the last 6 months. This result has come out of the blue, so to say. Sunny, do you track Hudson Agro?
Yeah.
Or any view there?
Yeah.
On the result?
Very strong set of number by Hudson Agro, especially on margin front. So we have seen EBITDA margin expanding to 13.9% versus 10 to 11% normalized band. So the reason for the same was that company has accumulated low cost inventory during the last quarter, and the benefit of same is flowing through. At the same time, more than 90% of the sales is through branded products. So I think pricing power continue to remain very robust. I think pretty strong set of number from Hudson Agro. And we will see a rub-off effect of the same on other many dairy-based companies today in the trade. And we continue to remain bullish on entire dairy as a space from a short-term perspective.
Kunal, very quickly, this breakout move in Hudson, any thoughts here?
Absolutely, Niraj bhai, it's a fantastic breakout. Jan 2022 high is taken out recently. It's been 2.5 years of consolidation, and the breakout is actually at 2650. It's directly opening at 1250, and it's opening at 1325. So yeah, it's a clear thumbs up. I think new rally might just emerge from this level. Targets can be as high as 1750 to 1800 in a longer term.
Well, that's Hudson Agro. It's a great performance on the counter. Margins have improved, remember, because of the heat wave, which hasn't worked for many companies in the quarter. It's actually worked for them. They've sold more ice creams on back of the heat wave in some parts of the country. Margins have expanded, and this is not my version of it, by the way. This is the management saying that the heat waves worked for the company.
No, absolutely. When it gets hot, you have more ice cream.
We eat more ice cream. So it's done well. The stock is already up 12%.
Arun ice cream.
We should. Oh yes, Arun ice cream, which is now in Maharashtra as well. But that's a counter you want to track. 12% higher is what we have in pre-open trade. A quick check on Century Textiles as well. They've picked up a land parcel with a significant value of construction, which is before. It's 2.5%. So not a runaway rally. But actually, you know, what did well yesterday, and maybe we can get a perspective on that going as well. Kunal, oil and gas stocks, so Oil India, ONGC, sprang out of nowhere in terms of gains, and they've been on the buy side for the last few days now. If we get a flat start on any of the oil and gas names, would you consider initiating a long trade for the next couple of days? I know tomorrow's a holiday, but maybe up until Friday.
Absolutely, we are structurally bullish on ONGC, and you must have seen the counter actually gave all-time high breakout, and that breakout was on 8th of July, where the counter was up by around 3.5% and closed at around 300. So at that time only, it was a perfect initiating buy, and the counter is already up by around 10% from that level. I'm very bullish on this. Any decline from the present levels to say around 310, 315 kind of levels can be a good level to initiate, but I will not be really keen to buy at the peak. Rather, I'll wait for some kind of pull-off to happen. Buying near 315, 310 would make sense. And the positional target on ONGC is now at around 350 to 355. So yeah, it's a thumbs up for all counters, but specifically for ONGC.
Okay, very quickly, Kunal, 30 seconds. If you had to bet on one stock for the day today for trade, which one is that?
It's going to be IDBI Bank, clearly up. So with the stop loss of around 85, one can initiate buy on IDBI.
So you will buy it on open with a stop loss of 85 and a target of 98.
Correct.
Okay. Well, 20 seconds left for the markets to kickstart. Maybe we'll try and take opening comments if time permits from our guests. But let's just stick to this because expect a start which is, I don't think we will do what a Nikkei has done. But the question is whether IT or banking can come back into freight today, because banking had a bit of a late surge in trade yesterday. Nothing dramatic, but a bit of a late surge. Let's see if it's building on from there today. Flat start, 25 odd points, bring up the bank Nifty on a flattish day for the Nifty and the Sensex. Nifty Bank 2 fairly flat. IT gave up some of its gains yesterday. Wonder if Nifty IT is down. But mid caps and small caps are the other one. All other indices are flat. Want to see if the broader markets are, no, not really outperforming. 0.25%, nothing kind of a day, maybe because of a holiday tomorrow, not too many aggressive positions, who knows. Bring up the heat map, show you what's moving and what's not. Okay, Bharti Airtel, Adani Enterprises, SBI. Now, Bharti obviously is moving by virtue of the fact that telecom is in focus today. A City Note highlights that all of Vodafone, Indus and Bharti would stand to benefit in many ways from the AGR dues if the Supreme Court gives the leeway to Vodafone, by the way. Coal India is the other one. Mahindra & Mahindra, interestingly, is out there, and Adani Enterprises, like I said. HDFC Life, no big reaction to the brokerage notes which are constructive despite talking of a re-rating. So a bit of a nothing day, but for the fact that the number of greens far outweigh the number of reds on the screen. What's losing out? Hero, Dr. Reddy's, Divi's, maybe a bit of pharma pullback day. Yesterday was a pharma day. Today it seems like a bit of a pullback. Really nothing, Tamanna, on the index worth really speaking about. Maybe safe for a Bharti.
Yeah, it's completely flat, and I think people being careful before that midweek break. That's one way of looking at it. Let's see what the broader markets are also doing in morning trade right now, and not too much activity, I would say. The Nifty and mid-cap indices under 0.5% up, but in the green. That's to be marked for sure. Let's look at specific stocks. Vodafone, Indus Tower in focus. Now, if AGR dues, it's not AGR dues actually that the Supreme Court will review, it's the calculation of AGR dues. If that metric is reviewed and the Supreme Court allows it to be reviewed, that will be very positive for all telecom stocks, but Vodafone, who's the most hit, will benefit the most. Indus Tower will piggyback on that. So 2.5% on Vodafone, about 1% up on Indus Towers this morning in opening trade. Looking at how flat everything is, that's not half bad relatively. HDFC AMC in focus. Remember, their numbers came in just before market closed yesterday. A lot of brokerages are bullish. That stock is positive this morning as well. Z Entertainment was the other one that we've been tracking. They're going to be raising 2,000 crores. Stock is about 2% up, 1.5 to 2% up. Paytm, on the other hand, has had some negative news from the regulator, but has stayed flat, actually recovered from its losses, which it saw in the pre-open session. Bank of Maharashtra, again, numbers came in towards the close of markets yesterday. Good numbers. The street is rewarding it once again. You saw a spike up in the stock just before closing yesterday, up about 2.5% today as well. Hudson Agro is the other one that we've been talking about. A great run. Post its numbers in the pre-open session. Let's see what's happening to Hudson Agro right now as well as we move ahead. And yeah, it is definitely the newsmaker this morning, 9.5% up on the back of better sales in the summer months. It's hot, so you want ice cream. Just want to quickly look at what's happening with all the tire stocks, because remember, they were in focus yesterday. MRF is increasing rates in some categories. JK Tyre is just about 1% up. But in the green, let's look at what's happening to Apollo, what's happening to MRF. So Apollo is about, just very flat right now, and so is MRF. So that whole run-up that we saw yesterday does not seem to have continued, at least in the first few minutes of trade. So I would say that very stock-specific movement, Samina, and not too much action.
The Nifty 500 is up in line with the benchmarks. So that's a good thing. It's up 0.25%. Oriental Carbon, pull up that one, 18% up move on the stock. If I can get Oriental Carbon, if we can pull that one up, we should get an idea of what the stock is getting up to and why it's rallying the way. 17% on Oriental Carbon. So that's the standout on the Nifty 500 this morning. You've got a couple of those numbers. So Angel One reported, because of Angel One, that whole industry, the whole sector stocks are doing quite well today. So Angel One is trading flat, but you've got Motilal, that's up 4%. Take a look at 361 WAM. That stock also, the last time I checked, had an uptick in trade. It's actually gone down now, 2.5% on 361 is what I have. Anything to do with budget is seeing profit taking. So railway companies are trading weaker. IRIDA, after reporting numbers that beat street expectations, is taking a little bit of IRIDA, if I can get that one up, 4% lower. So what it did yesterday, it's given up most of its gains today. Jyoti CNC is also seeing some weakness. Take a look at Apollo Microsystems. It hit upper circuit yesterday on a big sort of being shortlisted by the Indian Navy, and I knew this. This is going to be an up journey on this one. This is the only defense stock that hasn't participated. And we caught up with the management actually. I don't know if any of your viewers caught this, but they've talked about a 50% growth in top line this year, which is a huge improvement from the 25% that they were doing. Unlike all the other defense stocks, this one hasn't done exceptionally well. So you're seeing a circuit breaker again on this one, 5% higher on back of that conversation that they had and with, of course, us and other agencies too. Apart from that, Vodafone is up 2.5% that Tamanna has already highlighted for you. But a few more that are worth mentioning is Godfrey Phillip. Saw a big move yesterday, sees a big cut this morning. So profit taking emerging after the stock hit a gain of 10 to 11% yesterday. Geo Financial numbers were in line, but the stock is weaker. Second straight day running, railway stocks are weak. So you've got Jupiter Wagon that's down 6%. Railtel is down 1.5%. So it's not too bad, but there is very obvious weakness coming in. Zomato, that made a record high yesterday, is trading flat as we see it. ICICI Prudential, which is usually a quiet stock, has had a good run in the last 1 week. Today is the first day that it's seeing a little bit of consolidation at record levels, so not getting up to too much in that sense. On the buy side, Raymond continues to do well, 5% higher, but Century Textiles would be another one to watch out for. Century Textiles, on back of that 1,400 crore land bank, is up 6.5%. And Chennai Petroleum, every now and then you have one of these oil and gas names that come back to trade quite strong. So I think Chennai Petroleum and Century Textiles are the standout trades. Raymond also doing quite well, and Motilal up 5%.
Quick call from Kunal Rambia before we let him and Sunny go on, what have you spotted top of the charts today? And let's start with your take on Chennai Petro, Kunal.
So if I look at the Chennai Petro counter, the overall trend is absolutely strong, and the new breakout was seen today itself. That's at around 1100. Counter is trading right now at 1180. So again, for the aggressive trader, it can be a great buy at the present level itself. Stop loss can be 1140. Now I change my stance from IDBI obviously to IOB because that has shown a good strength. So I think at 69, the counter already made a high at around 70 plus levels. If it manages to sustain near to the high, that was the breakout which we discussed. I think the targets can be 85. The other two counters which I shortlisted right after the market open was, the first is LIC. Now look at this counter, it's up by around 2%. It's giving the first breakout of the broader consolidation of 3 months. I think with the stop loss of 1060, one can initiate a buy and the targets can be 1125. And one more IT company is Intense Technology. Look at the strength. It's massive. The counter is trading to all-time high, near to all-time high. I think 170 is the level. With the stop loss of 150, one can initiate a buy and the targets can be as high as 200 levels. So these are two positional trades which I spotted after market open.
Okay, Okay, thank you so much for that, Kunal. Sunny, great to speak with you as always, and thank you for joining us. All right, so that's the first cut of how markets have opened, but let's get a bigger view, because remember, we're just days away from the big event, and Madana Gopal Ramu is joining us. He is fund manager and head of equity at Sundaram Alternate Assets. Very good morning to you, Mr. Ramu. Great to have you on the show with us. Let's begin with the key question of whether the budget trade is now a bit redundant. I'm asking this because in the 4-5 days run up to the budget, the same set of stocks and the same buckets of stocks, those sectors have been buzzing for the last 6 to 8 months or so. Pre-election, pre-interim budget. Is that now a redundant trade? Have investors rotated out of it, or should they?
I feel, India is a fiscal constrained country as well. But what we are seeing is there's a bit of surplus we are getting from the tax side, as well as from RBI, a large dividend. Therefore, government will do a meaningful allocation across various sectors. I think both investment and consumption should be looked at. The focus in the previous budgets were more on the investment side. A bit of support to consumption will help us to take the growth further or consolidate the growth further at the current levels of 6 to 7% that we are seeing in India. Therefore, I think government is likely to do that. The trade towards budget, I think always, given the flows, it's likely to be skewed towards infrastructure, which seems to be played out. But broadly, we are not very negative on the market. There are still pockets of good opportunities to invest into. But yes, the infra play towards the budget seems to be at a much higher speed than what we have expected.
Madan Gopal, this is also Samina joining in, and the recent rally has been phenomenal for the street. Calendar year, we're up 12%. Last 1 year returns up. I mean, we are the second best performing market in the world as we stand. Do you feel like we are borrowing returns from the past, and one trigger that could potentially disappoint is earnings? Do you feel earnings this quarter will be able to keep up with the sharp rally the markets have witnessed?
The broader participation, which has probably happened last year and following this year, due to narratives being very strong and the flow supporting it, as well as last year we had a good commodity tailwind, which helped most of the companies report good margins, which is going to be missing out from the second half of this year. So broadly, you will see earnings growth disappointing in a few of the sectors, which will reduce the earnings expectation. That can have some sort of leading to consolidation in the overall market. But if you really ask us, when we look at some of the long-term growth opportunities and specific stocks within those themes, we still feel if any investor takes a 3-year view and gets into the market even today, the likelihood of making a high teen sort of a return in the market looks possible. This is because of focus in one, the government's focus on the manufacturing, as well as the government's tax surplus leading to support to the growth further. I think overall, we feel that if you're stock selective, you still should not worry about the valuations in the market at this point of time. But if you are a passive investor investing in the indices, the best of the time is behind you. Better to move to an active investor and active fund manager. And I think being a part of the teams which are playing the India growth story, that should broadly help an investor to make a reasonable amount of money. But it has to be at least a 3-year view. It cannot be a short-term view in the market anymore.
Madan Gopal, good morning, Niraj here. You were constructive on IT, particularly ER&D, if I'm not wrong, since a while. Now, we've seen a bit of a rally post the Accenture numbers in all IT stocks, so much so that some of those stocks are trading at very high valuations, particularly the ER&D ones. Are you still constructive on them, and what's the view on IT services as well?
Input IT is still not, although we are long-term constructive, still not coming out of the hood, right? It is still, the large cap IT companies are not yet out of the earnings. We are not seeing a large earnings upgrade happening there. But what we see is some of the ER&D companies, once the discretionary spending comes back, can surprise on the growth front. Obviously, the valuation is rich. So we are not going too much aggressive on this positioning. We had certain gaps which we filled in. We are more positive on the mid-cap space here. And I think given what is happening in US in the artificial intelligence space and data center space and cloud, we feel that this space has potential to surprise on the growth front. That's where we are positioned there. But yes, obviously the valuations are too rich. So we are going pretty slow on this, not too aggressive. We are still underweight on the IT sector. We will look for right opportunities to enter in this space. But whatever we have in the mid-cap ER&D space in this area.
Where are you constructive right now? What would be your top sectoral bet? I know you'll be bottoms up there, but if you can talk stocks, great. But otherwise, what's your top sectoral bet?
See, broadly, it flows through in the long-term call that India. We believe on the India growth story. I think India is set out with the support of what government is doing on the manufacturing side. We will look at somewhere closer to 6.5-7% sort of a growth on the real GDP side, and 10% to 11% sort of a nominal GDP. And if you really look at what we can play using this, one, obviously manufacturing. In manufacturing, we are pretty constructive on the power side. As a country, we have lagged behind on the power capacity side in the last 2-3 years. Also on the transmission side, given the focus on the renewables, the dependency on the power transmission will increase substantially. Also, on the power generation side, both coal as well as the renewable will see capacity addition. So we feel that power sector will witness an unprecedented sort of an investment in the next decade because government has to meet both the climate change targets as well as the energy demand. So this is a very interesting area. And I think a lot of companies which left this space will come back. Profitability will come back in this space. Valuation is still not too high. Except for certain pockets. But I think power sector is bound to go through a long-term story and the investment is likely to come on an unprecedented level here. So this is one area where we are long-term positive. Second is, I think, given the affordability that has come, both on the renewable side as well as on the EV battery cost, you will see government should, and I hope in the budget, a lot of focus comes in this area. You will see domestic manufacturing for solar cells and domestic manufacturing for EV battery will be areas where government should focus on. Because the affordability is there and we can scale up meaningfully in these areas. If you look at what is China doing in these areas, they are scaling up pretty fast and pretty huge. I think India is also consciously wants to keep the import on check on these areas. I think there's a big amount of J-curve sort of an impact coming in both these areas. So we have taken some specific positions looking at this long-term opportunity. This is again part of the manufacturing theme. We have always been positive on the financial space, particularly NBFC, small ticket, LAP, affordable housing, used vehicle finance. This is where our parent has grown and done a remarkable job over so many years. We feel that area looks pretty interesting with per capita income growing and more people becoming bankable. So we have companies which are positioned on these segments. We are positive overall on the retail credit, which has grown much superior than the overall GDP. But specific within the retail, we are interested in the segments that I mentioned, and very good opportunities are coming through at this point of time as the kind of the overall per capita income being much better in west and south part of the country. So some of these very specific NBFCs operating in these areas are looking pretty interesting.
Gopal, while I understand the themes that you're betting on and we completely resonate with that, tell us 3 to 4 stocks that you think could be the next Titan over the next 5 to 10 years. In terms of ideas, while I get the sectors, 5 stocks that are in your model portfolio that you're highly, highly optimistic and bullish on.
I don't want to mention specific stock names, but because of the regulatory requirement. But what I would say is, I think if you're trying to play EV battery, there are 2 companies, right, which are mostly in lead acid battery, who have now transitioned very nicely and investing into the EV battery capacity. So you have to take a little long-term view on this. And I think we are talking about numbers like each of them adding some 6 gigawatt in the next 3 years. But if you look at what is happening in China, there are companies which are operating at 300 gigawatt each of them. And China's total capacity on EV battery could reach 3,000 gigawatt. And EV penetration in China is almost 50% at this point of time. So there needs to be a leap of faith. And if you look at it, this 6 gigawatt can turn out to be easily 25 gigawatt in 5 to 6 years time period. That is the kind of scalability potential that these stocks offer. Same as with some of the solar cell manufacturing companies. Today, we have solar modules which are being made in India. We are self-sufficient. But if we look at the solar cell manufacturing, there are hardly any capacity. We can count it could be closer to 3 gigawatt. And the demand for solar modules in India can touch even up to 25 gigawatt. And right now we are importing a lot of these cells. I think a transition to India at a reasonable price, we can domestically source these in India as well. So over the next 4 or 5 years, we will see a lot of this solar module manufacturers trying to become solar cell as well. And there is a good opportunity coming there in the IPO market, which are interesting there. So broadly, these are areas where the companies which are operating in these areas looks interesting to us. On the financial side, we feel that there is a south-based small ticket LAP lender. This guy has grown from 2,000 crore book to 8,000 crore in a very short period, before COVID and after COVID. He can grow almost like 30-40% in the next 5-year time period, and take his book from 8,000 crore to almost like 35,000 crore. It's a company which does almost 8% ROA, and you can look at it easily closing at around 7% ROA in 5-year time period. So if you put these numbers and look at the current valuation, these are companies which can easily double in the next 3-year time period. So I can mention about similar company in affordable housing space, which is also growing at that kind of level. So broadly, we feel that within retail credit, if you focus on this in the small ticket areas, which is more on the used vehicle, affordable housing, and LAP, pretty interesting companies are coming through. But obviously, we need to be very careful of how is the underwriting process. So we have been very selective on which stocks to look at, and that is what we have learned from our parent also. Being an NBFC, if you are in the right profitable segment which is growing, you make a really good return out of it over the long term, which is what Bajaj Finance did for a long period of time. So we're looking for next Bajaj Finance out of these companies. On the consumer side, I think the sector itself is not doing well at this point of time. But we have been lucky in calculating some of the stocks right there, like Zomato, Trent, and Titan. We still feel some of these ideas have potential to outgrow FMCG space,
right?
And are available at a reasonable valuation, we feel.
Okay, so Zomato and Trent still available at a reasonable valuation, you believe. Thank you so much for joining us today, and great to speak to you on the show, Mr. Raju. We'll take a very short break, but on the other side, we're speaking with Mohit Bhandari. You will be hearing an interview with Mohit Bhandari. My colleague Sajid has spoken to him. He's a managing director of Temasek India. He's actually the MD Investment India for Temasek, and he's talked about why Temasek is betting big on India. Stay tuned for that.
Hello and welcome to Talking Point. My guest today is Mohit Bhandari, who is the Managing Director, Investment India at Sensex. Mohit, thank you very much for joining us on NDTV Profit. You came out with your annual review where you have increased your exposure to India from 6% to 7%. Give us a sense from a macroeconomic point of view, how do you see the India growth story?
Right. So first of all, thank you for having us as part of your program, and great to speak to you. I think we are long-term very optimistic on India. We've been in India now for more than 2 decades, so we have seen the journey and rode the journey of India's economic growth over the last 2 decades. As you can see, our exposure to India has increased from 6 to 7 over the last year, but it has in fact increased from 4 to 7 over the last 4 years, and that just reflects the fact that we are very optimistic about India's both near and near-term outlook. But to your question, I guess it's because India looks good both from a macro and micro perspective. So the macro, I guess, is well known, which is both the GDP growth is strong, the inflation is well within the tolerance threshold levels. The current account deficit looks as good as it has been. And the fiscal deficit, the government is clearly on the path of fiscal consolidation. And with the kind of tax revenues that we see, there is enough room for the government to deliver on the targets. And this is all the results of effort that we have seen by the government over the last decade. So we are perhaps reaping all of that now. What you're seeing is structurally strong growth. What you're seeing is compounded benefits of multiple reforms that have taken place over the last decade. And what you're perhaps now seeing is second and third order benefits of various policies and reforms. So India in that sense looks very robust, as I said, at the macro level. At the micro, of course, corporate India is well positioned. As we've discussed in the past, the banks are well positioned, very healthy balance sheets. Corporate India has deleveraged, and therefore there are multiple levers that can support India's growth story. So we are therefore very constructive and optimistic about India, and that reflects in our step up in the position.
You more or less doubled your exposure to India from 4 to 7 in the last 4 to 5 years. As you invest more capital into this country, as foreign capital into the country, which are the new emerging sectors which you see more interesting? The growth story on India is also about infra-led story. Have you increased your exposure to infra in any way? And is there a sectoral theme that you are now looking at? Consumption always has been one of them for you, but in various buckets. But can you give us an indication of how your sectoral themes have moved in the last 1 year?
Yeah. No, so last 1 year, as you would know, we had a big investment in Manipal hospitals where we took a majority stake. So as a consequence of that, healthcare as part of our portfolio would have increased. But honestly, I would not go on a year-to-year change in sectors. I think there are 3 key sectors for us, which is financial services, healthcare, and what we call as tech and consumer. And we have these sectors also play into what we call as trends or mega trends, which is consumption and longer lifespan, and to that extent, we continue to focus on these 3 sectors. We have also invested in multiple sub-segments within these sectors, so arguably we hopefully understand these sectors better. So these sectors will continue to remain important for us. But to your point, yes, there are other emerging growth sectors like infrastructure, like green energy. And we have participated in growth of both. In infrastructure, we have done that both directly as well as along with the portfolio companies. So to give you an example, we would have partnered with our Singapore portfolio company, Ascendas, to build a warehousing and logistics company. we have partnered with the Schneider. So we have a joint venture with Schneider where we have 35% stake, which you could say is broadly in the industrial space. And at the same time, our portfolio companies have also participated in the India growth story. So you have Singapore Airlines, which is now invested in Air India, where they are the second largest shareholders after, of course, the Tata Group. You have STT, which is perhaps the largest or the second largest data center player in the country. You have Sembcorp, which is investing behind renewable energies. And along with another platform that we have, which is what we call as O2 platform, which is along with another partner, EQT. Between the two, we would have more than 5 gigawatts, perhaps 6 gigawatts of renewable energy. So we have, to your point, yes, invested in infrastructure, both directly as well as along with our or via our subsidiary companies. Similarly, on what you may say green energy or the broader theme of sustainability, which is core to our charter, institutional charter, because I think it is imperative for the planet. At the same time, this is where the government mandate is, which is to drive the country towards net zero by 2070. And we as an institution have even taken upon ourselves a more tougher target, which means a shorter timeline. So we have also been focusing on this space. I think over the last year or so, we invested in the EV four-wheeler business of Mahindra's. Similarly, we invested over the last year and for that matter 2 years in the Ola EV business. So we have made our efforts as well to be part of this sustainability journey, which is critical as well. So having said that, the 3 key areas I spoke about earlier will...
I would like to pick your brains on the. I would like to pick your brains on the on the electric vehicle part of it. But before that, you mentioned in your presentation that key drivers for growth include infra-led capex, private consumption, and supply chain diversification. So just wanted to understand what excites you in these 3 pockets, and is there enough room for growth and companies available in these 3 pockets?
Right. So, okay. I'll go one by one. So when we say consumption, to be honest, consumption is a very wider theme for us. We even look at retail lenders in financial services as a quasi-consumption play. So consumption is therefore a wide spectrum, and to your question, consumption, private consumption is 60% of India's GDP, so will always remain important. And as India gets more affluent, the spend patterns continue to evolve, and to that extent we look for opportunities that play in well or drive as well as are beneficiaries of that growth in the private consumption. Infra, I think, is critical for the growth of the country. India has done a phenomenal job when it comes to digital infrastructure, and is similarly investing behind physical infrastructure. So the opportunities, the need for the country is there, and as we just discussed 2 minutes back, we are also participating in it directly or along with our subsidiaries. And ideally, yes, participating in allied themes like energy transition and so on. I think supply chain diversification, resilience is I mean, we've been excited about India even before geopolitical reasons started driving supply chain diversification. But yes, we do think that where there is an overlap or convergence of multiple factors like a strong domestic market, favorable government policies or incentives, and a strong local ecosystem, you will see supply chain diversification pick up faster or sooner. So you would see growth opportunities in all 3. And to that extent, we look for right opportunity for us in all segments. We are, of course, fundamentally a bottom-up investor, so these themes give you a broad trend, but ultimately we also look for the right partner and the right valuation is to make sense for us.
A few days to go for the union budget, the big event that everyone is watching, including industry. Today on our special segment, Budget Wish List, we're speaking with Hitesh Doshi, the CMD of Wari Energies Limited. Now, this is one of India's largest PV modules manufacturer, has been in focus also because of an upcoming listing, and we'll try and ask some questions about that as well. But for one, Mr. Doshi, very good morning. Great to speak with you on NDTV Profit. And let's start with what is top of mind, which is budget, the first budget for the third iteration of Modi government. So Modi 3.0's first budget. And the focus on renewables has been huge. Through the first two terms, continues to be so. What are you hoping to see from the budget which could really make a difference?
Thank you. Thank you very much for inviting and giving me this opportunity. As a manufacturer, definitely the first thing we'll look as how we expand more and more manufacturing in the country. And when globally, all the countries are looking to India to provide alternative supply chain, or I will say the additional supply chain, then where the market is concentrated to one country or the proxy countries for more than 99% of the supplies. So this budget is a good opportunity to use to create, and which Government of India has already done. Today, we are seeing in a solar module, our capacity of ALMM capacity itself has gone above 50 megawatt. And slowly we are thinking that in the next 2 to 3 months, we will see that it will cross even a 60 gigawatt, sorry. That's a 60,000 megawatt. So how this budget can support for more and more manufacturing end to end, for all the ancillaries, for all the products which are required to make the solar panels, batteries, hydrogen equipment in India, and not only for the India, but to provide the second option globally.
Right. So
this
that
is what as the industry are looking for.
No. So let's get specific, Mr. Doshi. You're saying you want support from the government. What does that support look like for you? Does it look like increased budget allocations? Does it look, do you see it in the form of action against imports of key components that you need, including solar cells, etc.? Let's get into a bit of detail of what you would hope to see specifically.
So manufacturing, any manufacturing to grow, there are the certain requirements to be a competitive globally. That can be the support for the capital, that can be the support for the interest rate for in the starting, and we already have the schemes like PLI, how we make it more stronger to compete it globally. We go for the power for the industries we are in. We need a huge power. There the requirements are how we can get the low cost power again to be the competitive. So we are competing to the countries where they are a little bit ahead of the manufacturing than us. And government has taken a lot of actions like capital subsidies or the PLIs, and this needs to be increased a little higher. Or we go to the export. When we have to export, and again compete to the countries where they have the larger export benefits. And at present, there are no benefits for the exporting from India. So how do we make India more competitive to them with the export benefits? So it's a series of the lists, and this list is exactly what our competitive countries has done. And we have done a lot. Now what we have to do more to really competitive enough them and take a little bit larger global share.